the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
Hello and welcome to the Banking Show brought to you by Business Standard. I am Ruchika Chitravanshi. We will start today's episode with the tax increase in the liberalized remittance scheme and the concerns of retail investors. In our Banker's View this week, we have Punjab National Bank's MD and CEO Atul Kumar Goyal. We will decode for you the government's decision to tax high-value life insurance policies. In our expert take with Tamal Bandhopadhyay, we would be discussing this great run that the banks have been having of late and what could slow them down. At the end of the episode, we will share with you the results of last week's poll and also tell you the poll question for this week. Don't go away. There is a lot of buzz around the government's decision to sharply increase the tax collection at source rate for outward remittances. In this report, Bhaskar Datta explains the implications this may have for overseas investment activity.
One of the most talked about aspects of the union budget has been the government's decision to raise the rate of TCS for foreign remittances under the Liberalized Remittance Scheme, or LRS, of the Reserve Bank of India to 20% from 5% earlier. The new rule will be applicable from July 1, 2023 on outward remittances for all purposes except educational and medical expenses. The TCS is not a tax in itself, and credit for the amount paid on any transaction is available to the payee. This amount is adjusted against their tax liability for that financial year. However, this higher TCS rate will lead to a higher cash outflow for individual taxpayers at the first instant. To understand the rationale for this move, we need to look at LRS from the perspective of what these remittances are used for. A sender may be using LRS for travel, for holiday, or to send money to relatives. Another could be to invest in equities overseas. The code for this kind of transaction is S0001. The government's rationale seems to be that HNIs use these remittances for overseas investments, and this is a capital account transaction. Over a period of time, this investment would appreciate and return to the user's native savings account, and this appreciation would be taxable at 20% under long-term capital gains. Investment platforms like IndMoney.com argue that the S0001 route benefits everyone, including tax authorities, and this activity is not undertaken by HNIs alone.
So I think the finance ministry perhaps has not looked at this particular specific purpose code, which is S0001, which is highly beneficial for all constituents, for both government, tax department, and for the consumer. The second point I want to mention is that this is not an activity which is being undertaken by high net worth individuals. There are about 25 different fintechs and stockbroking players which have enabled this activity since the last 2.5 years. More than 10 lakh people have started participating and growing, because these are the people who are consuming these products every day, whether it is an iPhone by Apple, or whether it is a Google service, or whether it is an Amazon service, and so on and so forth. So more than 10 lakh users have participated, and the average remittance value is meager 14,000 with an average annual income less than 10 lakh rupees. So this is not a high net worth individual use case where, the 20% TCS gets offsetted. Okay. We are trying to, via the Internet Association, we are trying to make this representation because it seems to be an oversight.
In the first 9 months of FY23, Indians remitted around $20 billion under the LRS. Outflows may touch an all-time high by the end of this fiscal, aided by a rise in international travel. According to bankers, there may be a rise in LRS remittances in the coming months as individuals rush to remit funds abroad before the new tax norms kick in from July 1.
Banks are saying that the move to increase TCS to 20% would impact overseas tour packages. Since overseas tours and travels usually goes up during the summer vacation period, one can anyway expect some increase in the overseas remittances under LRS. Overall, they are expecting that surge in LRS in the next few months and beefing up their services for their customers.
Individuals who may not want to avail of a tax credit and then wait to receive a refund may remit money before July 1, and banks are gearing up for a surge in such requests.
Bhaskar's report suggests that the government is clearly trying to curtail the foreign outflow of funds, and while it is the HNIs which it wants to target, the move, it seems, is also affecting the small ticket investors. Let us see if in the coming days we see the policy makers reach some sort of a middle ground. In our Banker's View segment today, we have with us Punjab National Bank's MD and CEO, Atul Kumar Goyal. PNB's net profit fell 44% to 629 crore rupees in the quarter ending December 2022 due to higher provisions. Goyal tells our banking editor Manojit Saha what to expect in the coming days.
Welcome to the Business Standard Banking Show. Punjab National Bank, a large public sector bank, reported 44% decline in net profit in the third quarter. We today have Atul Kumar Goyal, MD and CEO Punjab National Bank, to discuss the bank's performance. Mr. Goyal, welcome to the show.
Thank you to everybody.
One of the reasons for the profit decline was higher operating expenses and provisions. Now, expenses for employee benefit went up by 185% in Q3. Is it a one-time hit, or do you expect more provisions in the coming quarter?
If you see, the buyback settlement is due from the November 2022. So in this particular quarter, in December quarter, we have provided around 181 crore rupees for the wage revision for 2 months.
Okay.
Second, if you see, as per the buyback settlement, if operating profit of the current 9 month is more than the 9 month of the corresponding period, although we have to assess for full of the year. If there is a increase of 5% in the operating profit corresponding period of the last, then 5 days PLI will be given. If it is more than 10%, then 10% PLI, 10 days PLI will be given. If operating profit is more than 15%, the 15 days entitlement. So as of date, if you see our 9-month operating profit as compared to the 9-month operating profit of the corresponding period is the 21-22, it is more than 5%. So we have also provided 5 days PLI around 79 crore. Now the another provision, which is AS15, because when you are providing the wage hike, so when we actually pay the wages, so there will be impact of the gratuity and pension on the revised. So so this is the reason we have provided AS15 provision in the last quarter, December 2022, around 1,854.
Right.
So this is the 1,330. Normally, if you see, every quarter it was coming around 500 crore rupees. So if you deduct 500 crore rupees from the 1,330, around 830 crore rupees we have provided for this provision for the gratuity and pension on the enhanced wages. This is the main reason. So you can think some of the because your question it is a one-time hit or because we have taken the actual valuation. So part may be the one time, part may be the sequential basis, because we have provided wage revision only for the 2 months. So naturally for the 3 months we have to provide in the March, and then every quarter we have to provide. But little bit when AS15 provision is concerned, there may be a less provision what we have provided in the December 2022.
Okay, so some provision may have to again be attributed for the fourth quarter also.
Yeah, that is only for the wage revision, but AS15 may be reduced because AS15 they have calculated on the hike in the wage revision, so उसमें थोड़ा सा कम होगा या.
Now coming to slippages, fresh slippages for the third quarter was close to 4,000 crore.
Right.
It has come down. The trend is declining. Do you expect slippages to further come down in Q4 and then in the next financial year?
Definitely, it will decline quarter by quarter, as I told you earlier also. June quarter mein it was 6,500, September mein it was less than 6,000. It was around 4,000 for the third quarter. So because as on date, I do not have any lumpy account, not a single account more than 100 crore rupees in our portfolio, which we have to recognize. I will give you the data of the SMA2 account. SMA2 in December 2022, 10,207. But January it was declined to 4,816, and more than 5 crore is hardly 1,107, and maximum amount is 93 crore single account SMA. So yeah, definitely it will gradually will decline every quarter.
So, sir, where do you see your net NPA and gross NPA ratios, say, by the end of the current financial year?
It is declining quarter by quarter. If you see my gross NPA number, we have reached to 9.30. 9.30, 9 point, just let me check. 9.76. 9.76, it was 10.48. It was 10.48 in the December, and we have reached to 9.76. So we are hopeful it will be around 9% by the end of the current financial year. Similarly, the net NPA number, which was 3.80 in September, reduced to 3.30 in the December quarter, and by the end it will be around 3%.
So coming on the business side, now credit growth of PNB was decent. It's around 14%. So
Yeah.
do you see this financial year ending with similar kind of credit growth, or do you think Q4 will be a big boost for the credit uptake?
Either there is a demand of the credit, and you see the September quarter and December quarter. December quarter position has been improved to around 13 to 14%. So, but still we are optimistic. Demand may increase, but we are giving the guidance that our credit growth in the current financial year will be remain between the 13 to 14%.
13 to 14%.
Yeah.
And next financial year, do you think there will be a further uptick in the credit growth?
That I think it will be too early. We will decide in the market which type of trend is there. But demand is increasing. Demand is increasing. The corporate who have got the working capital limit sanction, earlier they were not utilizing. Now they are utilizing, and some of the expansion project is also coming, like steel. Some of the company they are going for the expansion, which were not going earlier. And some of the cement plant is also, there is a good demand in the road infrastructure. Also, a lot of project is coming, and the good demand in the NBFCs also.
And sir, coming to the deposit growth is of course lagging the credit growth. Do you think deposit rates have peaked, or you can offer you can increase the deposit rate further?
If you see, our deposit rate is at par with the peers. As on date, we have, although in the last 6 months we have revised our rate on the term deposit also, and I think now whatever rate we are paying, I do not foresee that there will be a further too much of increase, except 10-15 basis point. They may be high, but not too much. And as far as PNB is concerned, deposit is not a problem for the PNB, because we are having the large branch base, more than 10,000 and 16 crore customer, and we have opened the around 64 lakh account from the 1st of the April 2022 saving account, where money will come. Similarly, we have opened good account in the current account also. But if you see the industry, definitely deposit growth is less as compared to the loan growth.
And sir, finally, you have recently said that your exposure to the Adani Group is 7,000 crore. Is it including fund and non-fund based exposure?
Yeah, it is including everything, fund, non-fund, even the investment exposure also.
Investment exposure. So you have some pledged shares also?
No, not at all. No.
What is your take on the entire issue of going ahead?
We are closely watching and it will be too early. We are closely watching as on date, as I told earlier also, all the loan which we have given, they are based on the cash flow generating asset. So as on date, I do not think any issue, but we are watching
Mr. Goyal, thank you so much for speaking to us. It was a pleasure talking to you.
Thank you very much. Thank you, Ji. Thank you.
PNB CEO said that the slippages will continue the declining trend in the coming quarters, and the net and gross NPA ratios will fall further, even if the bank has to make higher provision for wages and non-performing assets. Moving on to our next segment, Banking for You. In her budget speech on February 1st, Finance Minister Nirmala Sitharaman announced the government's decision to tax high-value life insurance purchases. In other words, the government would tax the maturity proceeds of life insurance policies if the annual premium exceeds 5 lakh rupees. What does it mean for the life insurance companies? Subrata Panda answers this in our Banking for You segment.
When Finance Minister Nirmala Sitharaman presented the budget for 2023-24 on February 1st, she also proposed to tax high-value life insurance policies. These high-value life insurance policies have premia aggregating to 5 lakh rupees and above. The government has decided to tax these policies to plug an arbitrage loophole. High net worth individuals or HNIs get tax-free returns on their high-value insurance policies through Section 10(10)(d) of the Income Tax Act. This move is not targeted at pure insurance products, term plans. Instead, it targets investments made in the garb of insurance. However, insurance industry insiders reckon this move is ill-aimed and have sought relaxations from the government on two fronts. Insurers believe that the classification of HNIs, aggregate premium over 5 lakh rupees per year, is a matter of concern because most people who invest in non-ULIP savings policies are essentially looking to build a corpus for their post-retirement life. Hence, in their 40s or 50s, they could end up paying 5 lakh rupees aggregate premium with not so high incomes. So, the premium cannot define the level of wealth. Hence, they have asked the Finance Ministry to relax the premium threshold from 5 lakh rupees to 10 lakh rupees and have suggested to the government officials that instead of taxing the proceeds from the high-value policies under income from other sources, long-term capital gains tax should be imposed on them, and that too with indexation benefits. Otherwise, such policies could yield negative returns when adjusted for inflation. Major insurance companies have come up with their assessment of what kind of hit their business will take in the wake of this announcement. While the initial numbers are not alarming, none of the estimates has considered that customers may have taken policies from other life insurance companies. Insurance companies are preparing for the worst and hoping for the best. They are mulling business strategy changes to offset the proposed tax impact on high-value policies, even as they wait for some relaxation from the government. Most companies have said they will now look to sell more insurance policies with low sum assured and focus more on the mass segment rather than the affluent segment. They are also looking to make pure insurance products and ULIPs more competitive and attractive to increase their uptake.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.
We will be keeping a close eye on whether the government will listen to the demand of insurers to relax the premium threshold and impose the long-term capital gains tax on high-value policies. While insurance companies are preparing for the worst and hoping for the best, banks, it seems, are having a good run. Most banks have posted a handsome profit in the December quarter. Barring a few exceptions, both public and private sector banks have recorded a rise in operating profits. Our consulting editor, Tamal Bandhopadhyay, explains the reasons for this growth and why it might not last very long. Hi, Mr. Bandhopadhyay. Thank you for joining us on the Banking Show. You've said in your column this week that banks have been on a profit spree, and whether it is private banks or public banks, they have all recorded record profits this year. What has contributed to this growth?
There are a few exceptions, but on the whole, it has been a dream run for the Indian banking industry. Every quarter gets better than the previous quarter. Now, what are the contributing factors to this dream run? There are two factors. One is this, the NII, the net interest income, which is going up and up and up because the credit offtake is pretty cool, which actually the industry was starved of. This is a new phenomenon after a gap of quite a few years. So once the credit grows, your interest income also grows. So that interest income is phenomenal. That's one part of it. And second part of it is, because the hip hop NPs is not growing anymore, because the fresh slippages are very rare, so that the money that the banks used to set aside, or the so-called provisioning for the bad loans, that has come down. So it's both ways. You are earning more, and you are setting aside less money for the provision, because your provision coverage ratio has gone up substantially. You don't need to do much for most of the banks. There are a few exceptions again, which they need to. So it's, on the one hand, your bad assets have stopped growing. You have almost cleared not almost, you have been continuously clearing the hips. You are getting recovery, so on and so forth. Which is why you don't need to set aside more money. So you're consuming the cash, and that is adding to your bottom line. And on the other hand, your income has grown.
So one of the other things that you've talked about in your column is that the deposit growth is lagging behind. What kind of challenge does this pose for the banks?
That's the biggest challenge. I mean, if you ask any banker in private, that's the biggest challenge here, because the credit growth is in double digit for quite a few of them. It's 20% credit growth, which has not been seen for quite some time. So the challenge before the banking industry is to grow their deposits to support the credit growth. Now, how do you do it? Of course, you have many of them have excess SLR, which is the government bond. They can liquidate and support their credit growth. Theoretically possible, but practically no, because you have again yet another massive government borrowing in the next financial year. So liquidation of government bond holdings and using the money for growing credit, it's not feasible. It's a good time for the depositors. For the first time, they have been recognized, they have been valued, because typically bankers don't care about deposits. They will call you, all your relationship managers will call you to sell mortgages and two-wheelers and personal loans, but they will never ask you for deposits. They have taken it for granted. Now, for the first time, it looks like that you and me can dictate terms where to keep our money, and if you pay me higher rates, then only I'll keep my money. So it's a tough challenge for the banks. If they want the honeymoon with profits to continue, they need to have their credit growth, and to have their credit growth, they need to pay more.
You are calling it the honeymoon period. So you seem quite confident that it is not going to last. Why do you think it is not going to last?
Well, yes, I'm reasonably confident, because, banks' loans are linked either to MCLR or to an external benchmark. External benchmark typically is repo rate. So, and they are repriced immediately. The NII, that the net interest income, well, it will continue to be there, but net interest margin, NIM, which is the cost of loan, the money which you earn from the loan, and the money which you spend on your deposits, that net interest margin will shrink. So it's very critical. It's pretty cool. Yes, you will continue to, if you don't accumulate fresh NPAs, you will continue to make less provision. So that side is will continue. You will not spend as much money as you had done in the past, but your net interest income will go down, because your cost of deposits will go up. And on the treasury side, I don't see much possibility of making too much of money, considering the government borrowing program. It will be range bound. So then what will supplement your drop in net interest income? There's nothing else. So you have to accept the fact that this, you call it romancing or honeymoon, has to end. My take is March will be the last quarter, which will be yet another high quarter. And then from June onwards, we will see it's slowly going down.
All right. Just very nicely explained, Mr. Bandyopadhyay. As you explained, the NII, the net interest income, is growing, the provisioning is coming down, which is contributing to this great run that the banks have been having. But as you said, it is not likely to last beyond one more quarter. So lots to watch. I especially like the point you made about how people like you and I are important now as far as the deposits go. So thank you so much, Mr. Bandyopadhyay, for joining us, and see you next week. So the banks are likely to start feeling the pressure when a substantial portion of their deposit portfolio gets repriced. As Tamal said, March quarter could be the last quarter for their honeymoon period. This also links to our poll question of the week, but before that, the results of the last week's poll. We asked you, with CPI inflation crossing 6% again in January, should the Monetary Policy Committee of RBI raise the repo rate further? 72% said yes and 28% said no. With banks hiking the deposit rates following the interest rate hike by the Reserve Bank of India, are you wondering if your returns are beating the inflation? Maybe it is the right time to invest in fixed deposits. On one hand, in a volatile market, FDs may protect your capital. On the other, FD rates in several banks are still well below inflation. So we are asking you in this week's poll, do fixed deposits make sense again for savings? Our polls open on Friday, and you can respond on Twitter, Instagram, LinkedIn, Telegram, and our website. We will be back next week with more news and analysis. Thank you for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that led success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.